Hey, what's up, you guys? Jason Wheeler here with jasonwheeler.biz, mortgage lender here in the East Bay Area, Northern California. And I wanted to take a quick minute here. I made a video about a week ago in regards to mortgage rate trends. I got some really good responses to it, and it seemed like people really liked it. So I wanted to go ahead and I thought I would go ahead and talk about mortgage trends maybe once, twice a week, and post it up and find out if I could help some people out. So what I wanted to do is just kind of see. Today's 12/14/2012, and what I want to do is just kind of look at some trends and see which direction the market's going here for the mortgage market and mortgage rates. As everybody knows, it's a great time to buy. Money's pretty darn cheap right now. So let's take a look. As a consumer, I think it's important that you could go ahead and take a look at this stuff yourself. There's a couple different indicators that we look at as professionals, but the best thing for you to do as a consumer is to check out Yahoo Finance. I've said this before. It's a great place. It's free. It's pretty easy to read. You can look at the different markets. If you're not into looking at the markets on a regular basis, that's okay. If you want to look at the general direction of interest rates, just look at the 10-year bond right here. Okay? And we're going to look at 6 months and see what's happened this week. Now, this is the 10-year note, and this is the general direction that interest rates go in, mortgage interest rates. Lenders do price out their mortgage interest rates daily, and sometimes several times a day. So it's they definitely do change with the market. As you can see, what you want to do when you come here is technical indicators. You want to do a simple moving average of 30 days, and that's going to draw you this smooth red line. So what we're looking at here is we've seen a relatively pretty stable flat trend in the past. This is a 6-month chart. And we've been seeing a pretty stable flat trend on the low side for the past couple of weeks, all the way ever since, actually a couple of months, ever since September. Although there has been changes, you can see that it's been up, it's been down, it's been up, it's been down. And what's been happening since last week is we've had a significant uptrend. You see these days, these all indicate certain days of pricing. We had an up day, an up day, an up day, and right here we saw a little bit of resistance at its moving average, the flat line here. But as you can see, these last 2 days we've really busted through upwards through the simple moving average line, which indicates that we're going to be starting a new uptrend here. So I think that my educated guess is that we're going to see a little bit of resistance right here at the 1.75 mark. So we may see it flatten out next week. We may see it flatten out or go down a little bit next week. And if this chart's any kind of indicator, you notice the pattern here. See how we see it hit when it goes up to about the 1.85 mark, goes down, up again, resistance at 1.85, again here, resistance at 1.85. Here we had resistance right here at the moving average, but since we broke through our moving average, we're probably going to go to our next resistance point, which I would indicate right here is 1.75, or it possibly could be going all the way up to 1.85. Who knows? It may even continue upwards. It's just an educated guess. So if I was doing a loan right now, if I was in process with a loan right now, I would say that if you want to protect yourself from losses, if you want to protect yourself from rates going any higher, now would be a good time to lock. Obviously, it was a better time to lock at the beginning of the week. Obviously, they were at really low point last week. But if you're in the loan process right now, and you want to make sure that you lock in, you don't want to have any more losses, because you're probably this trend, I believe, is going to go upward in the short term. So I would definitely call my loan officer and say, let's take a look at locking options and do that. So let's just look at a quick scenario of exactly what rates are today. Let's look at a basic scenario, because the 10-year note or the bond will show us trends, but it doesn't know exactly how the rates are pricing out. So that even though we've seen an uptrend, you'll see that they're still pretty darn low. Let's do an 8, good credit score. As you can see, I could do any different scenario, and I'm not going to just shop one or two lenders or one bank. I'm going to shop several. I'm going to shop over 60 different lenders here. Do a 30-day lock on a 30-year fixed. Let's just do a standard scenario. So we'll purchase it, and we'll do it in my hometown here. Let's just see exactly how we're stacking up in real time. Let it load here, and as you can see, we're just taking a little bit of time to shop several different lenders. So what we're looking at here is on a 30-year fix, you're looking at 3.25% or so, and that's with no points. And that is definitely it's a little higher than it was last week, like I said, but it's definitely a great time to go ahead and lock in. If you're in the loan process right now, you probably, if you locked in last week, it's a great time. You probably did a great job. Your loan officer did a great job. If you haven't locked in yet, you probably want to call your guy up and let them know you want to protect yourself against any losses, because we are looking at an upward trend right now compared to last week. If you're looking to close here in the next couple of weeks, I would definitely protect myself from losses if I were you. So that being said, the reason why I'm making these videos is just to kind of educate the consumer and hopefully add a little bit of value, show you how you could keep an eye on the marketplace yourself by going to the 10-year note. There's other places to do it, but this is a good free place for the consumer that anybody could have access to, the 10-year note on Yahoo Finance. And the main thing that I wanted to indicate to you guys is just to go ahead and get your questions answered and ask the questions that you have in regards to the real estate financing and real estate. It's the only way that you really jump into the marketplace and really have success with it. So with that, I'm going to sign off. Again, these are interest rates for 12-14, and good luck to you. Let me know if there's anything that I could do to help you out.